Today I'll be talking about customer engagement in the payments industry. This is in continuation with a few of the other topics that we have been seeing in relation to the payments industry over the past few weeks. So I'll be focusing on benefits, strategies, metrics of customer engagement, and the drivers of those metrics. So I came across a paper by McKinsey where they proposed the following 4 points as the foundational blocks to have good customer engagement in the fintech industry. So the first one is intelligent propositions. Second one is seamless synchronization with partner systems. Third one is smart servicing. Fourth one is good user experience. Now the first point, when we say intelligent proposition, it talks about personalization. So personalization of the financial services offered to clients. So the kind of loans that are offered or any other credit facilities. So all of that should be personalized according to the customer behavior. That is the first point. Second one is we talked about a lot of partnerships that are being formed in today's payments ecosystem, right? So we talked about, for example, the partnership between Apple and MasterCard for their digital wallet. So what they say is that whenever this kind of partnership happens and whenever an offering is made based on that partnership, the user interface or the user experience should be very smooth. So for example, when you're using the MasterCard digital debit card on your Apple iPhone, then both the software, that is the MasterCard software as well as the Apple software, should be in perfect synchronization with each other so as to enable good customer experience. Third one is smart servicing. So this is about customer service, and one important thing that is being talked about here is basically how do we move towards a faster resolution of customer queries. So how do we move from the manual customer executive based service to a automatic chatbot based service, stuff like that. And the fourth point is good user experience. Now this is also a point which we have discussed in one of our previous sessions, where the chief product officer of Stripe had said that companies which provide a good user experience have seen their revenue to increase by some X percentage. So that was not the only case where I have come across this point. So a lot of people in the industry are talking about that. So what this basically means is any company looking to increase its customer engagement should have these 4 components in place. But how do you actually measure success in the field of customer engagement? See, basically what customer engagement means is when people use your app or service for a longer time, like continuous, or when people use your product or service more often, or when they use it in a sustained manner, when they use it continuously, that is what we mean by customer engagement. But how do you actually measure success in this field of customer engagement? You have the following metrics.
First one is Sai, if you can just go back to the previous one, just as a as a case study of sorts, amongst all of us. Have you seen these things coming into play whenever you used various apps? There is the intelligent propositions, seamless sync with partner systems, smart servicing, and good user experience. So on smart servicing, what exactly is it, Sai?
It's using the chatbots.
Chatbots, okay, got it.
One example that I have is whenever I pay my internet bill to GPay, so from next month onward, it automatically gives me the update that this is my bill, and this is the due date that I have to.
Okay. Super. Yeah. Okay. So basically, this is in which app are you seeing that?
Google Pay.
In Google Pay, you're seeing it, is it? Okay.
Yeah.
So it also has like. So let me just very quickly open that. I'm trying to understand that.
I see the same thing in PhonePe as well. For electricity bill, I use that.
Okay.
Yeah, for phone bills also in PhonePe we can see that. Like for everything, I can see, like for Tata Sky also. So it pops up that.
Got it. So basically, once you use the utility, the bills, right? So either recharge or bills, etc. Then basically from next time onwards, it will basically alert you, right? Is that what you're saying?
Yeah.
Okay, that's nice. Yeah.
For
In fact, go ahead.
for mobile recharge, DTH, EB,
Okay.
credit card, rent, loan,
Okay.
cylinder, everything. Yeah.
Okay. Great. Excellent. Perfect. Even rent also.
Yeah, they started it new for house rent. Yeah.
Okay. Now, that's a big one, huh? So it's a big ticket item, right? It's not like a 10 rupees or 30 rupees, 100 rupees.
Yeah.
All right, good. Okay, in fact, I'm also seeing the same thing. So for example, for electricity, I think usually in order to pay it, it's sort of a hassle, right? I have to go to the browser, Google it, and I have to check the number, the whatever servicing number, all of that stuff. And I typically have to open the previous one in order to get that number, etc. These days, the way it's just like maybe 2 taps, right? I don't even have to find anything. There are just 2 taps, tick, and it's over. So it's very nice. Yeah, okay. So I think all of that comes under number 1, intelligent propositions, right? It's like personalization, right? It is ours that we are seeing. Anything else that you guys are seeing?
One more thing here is that so for example, when we recharge our mobile from Google Pay or any kind of wallet, right? So we get that scratch card. It says you get some 5% cash back up to X rupees on your next recharge, something like that. So that also encourages us to come back to the platform and use it again for the phone recharge.
Okay, got it.
They give you this brand specific vouchers. Say you can buy this Hotstar subscription at half the cost or something like that.
Okay.
So they connect with different platforms as well.
Are you seeing any intelligence in that? Do you see that they're sort of being useful? Because oftentimes I see that I don't want to use any of them. I think they'll have too many scratch cards because I would have used many times.
Yeah, I typically use only this Hotstar and there's one more actually for the bank loans. So yeah, only those 2 I use typically. Of the 50-60 offers that I have on my account, I just use those 2 alone.
Okay, 2. Okay, that's not great in terms of the percentage, right? So that utilization. Once in a while, it's a very low hit rate from their point of view.
Yeah.
Jairam, I think you were saying something, right?
Yeah. What I was trying to say is, even the rewards coupons which we are discussing, like now in PhonePe there has been a new option, like one better rewards. Once you click that, like whatever is our priority, like entertainment or fashions, clothing, we can select that. So going forward, we will receive coupons on the particular category whichever we have selected. Okay. And apart from that, in the retail shops, when you use PhonePe, now they have some special features. If someone pays, they no need to check. By default, there will be a background audio which will be telling like you received 30 or 40 whatever. And when I asked, are you using any third-party app or something, they told no. This is designed specifically for business accounts, so we no need to check our phone every time. So once it's paid, directly you get some audio.
They'll get the message, right? It's like hardwired, right? So I have also. It is useful. Okay. So the one that you used, that was for PhonePe, is it, Jairam?
Yes.
Okay. No, in fact, it's not just useful for them; it's useful for us also. And we also get to know it, right? So we know that they got it.
Yeah.
They've also integrated the metros. Like you can buy metro tickets from this for Delhi, Hyderabad, Mumbai, and Bangalore.
Okay. Yeah, I think it has been there for quite some time. In fact, long ago, about 2.5 years ago or something.
Okay.
I think I got this on Paytm, or at least I saw it at the time.
Okay.
Yeah, it's on Paytm for a long time, at least in Delhi.
Okay.
On the smart servicing part, like I've seen Jio app, like if you have some internet issues for fiber or Hathway, like even for Hathway, so it doesn't it automatically does some tests. The bot actually does all the tests. It will do the internet speed test, it will do connectivity test, and it will actually try to find out what the problem is. And if it can't solve it, only it escalates. So you can't directly talk to the customer service. You tell the bot what the problem is, and then the bot decides whether you get it escalated to the other level or is it already done.
Though we are looking at it from a sort of payment perspective, but I think that's a very good experience, because I've seen that in others internet.
Swiggy, Zomato as well.
Oh, yeah. Okay. The
I
bots have
think
been
most
becoming
of
more
the
prevalent.
e-commerce platforms today don't even show you that helpline number directly. So first we have to go through that automated response system, which will which is supposed to take care of all the basic issues. And if that doesn't solve all those basic issues, only then we are allowed to even contact the customer service executive.
So I'll just.
Yeah. So we measure any improvement that we have possibly achieved in the customer engagement by the following metrics. First is increase in monthly active users. Then we have reduced cost of acquisition, reduced cost of service, increase in product activation and usage, lower service turnaround time. So TAT stands for turnaround time. NPS is the Net Promoter Score, and then higher cross-sell. So for example, all the examples that we were just discussing, right, or more specifically the one which Akhil was talking about, where if we give them the error code, then they will tell us what the resolution is. So all those things reduce the service time for the customer service executive. So if you look at the customer service call centers, one very important metric that they track is the MPI, or the minutes per interaction, right? So when all the complicated stuff, even if that is also solved via that self-service itself, then that MPA is ultimately going to come down, right? So that is what we mean by lower service turnaround time. And then Net Promoter Score is another important metric. This is not measured only in the fintech industry, but this is common across industries today. So NPS has like 3 components: so promoters, detractors, and neutral. So typically, when you go through a product or service, right, when you buy something, they ask you a question on a scale of 1 to 10. How would you recommend this product or service to a friend or colleague, right? And then 7 and above means it's a promoter. 5 to 6, it means it's neutral. Anything below 5 would be a detractor. So like that, they measure the Net Promoter Score. So the idea behind this is that when customers are more engaged, or when they use the app more, and if they are really satisfied about the product or service, then the Net Promoter Score will be high. And cross-selling also, we discussed a few examples just now. So for example, when you use your wallet or the Fintech app for some kind of service, then you get a scratch card for selling you another service which you can possibly perform on using their platform. So for example, when you use it for a phone recharge, you can get a scratch card or coupon which you can use in another retail store or something like that. So that is what we mean by cross-sell. So all of this basically helps the customers be more engaged with the app and to continue to use the app on a sustained basis. And of course, the cost of acquisition, cost of service, so that is kind of self-explanatory. So for example, if the customer service executives spend less time in talking to the customers, right, so that in those ways we can actually reduce the cost of service. Any questions here?
Actually, just a quick question on the higher cross-sell part of it. This is for everyone actually. Have you seen higher cross-sell work? See, one area where we have seen cross-sell work very well is on Amazon, right? So for example, particularly where you're buying some gadget, right? So there are accessories that go with it, right? So for example, you're buying a phone, and sort of it predetermines one of the best-selling cover that goes with it. The phone is a little bit more personal. So take for example something which is a little, I would say, not so personal. Like for example, you're buying let's say a speaker, for example, right? So so there's also a cover sort of that goes with it. Let's say Bluetooth speaker or something like that, right? So and sort of it makes it easy. If you think of it, right? So for example, I have seen situations where, let's say, I would do a decent amount of research if I have to buy something for the company. Let's say if we are buying a camera, for example, right? So I would do a lot of research and come to a specific thing. Now I don't intend to do so much of research to buy the cover, right? So as long as it is pretty decent for it, I'm okay with it. And if it actually suggests me something I am 90% likely that I will just take it, right? So whether it is like, maybe 2% here or there is not going to make much of a difference, as much as the convenience of it showing me that, hey, this is the appropriate cover for this particular thing, and it looks decent to me, I'll just go ahead and buy it, right? So any cross-sell things that you have seen work in your experience?
So if there's an example of Myntra, so what Myntra does now is, if you buy anything, they will suggest you what other clothes will go with that. Like if you're buying a t-shirt or jeans, it will show you what t-shirt or what other jeans you can, or shoes you can buy with that. So if you want that styling, it will do it for you. So you don't have to buy the matching piece with it.
Got it. Yeah. It will suggest something, right? So because if you're already hooked on to that particular, let's say, shirt or a pant,
not only
right?
suggest, what it does, it shows the photograph of those together.
Got it. Yeah. It's a way of suggestion, basically.
Yeah.
Understood. It's a way of suggestion. So because you want to see it, right? Clothing is all about, how does it appear, kind of, right?
Yeah.
So because of that, it will sort of show together, maybe with a, model or something like that.
Yeah.
Okay. So that's nice. Yeah.
That's nice. Phone with tempered glass.
Yeah, the tempered glass that goes with the phone, right?
Exactly.
Yeah. Okay. So basically, I think some chargers. See, some of the phones don't come with chargers, right? I don't know if you have seen, right? So so for example, power banks don't come with chargers. You have seen that, obviously, right? Some power banks, I think they only give the connector. They won't give you the charger because we have to use the phone charger for it, and they'll work. And I think if I remember right, yeah, these days phones are also coming without chargers.
iPhone.
Unfortunately, no. So they have a very lofty goal. Okay, we want to decrease electronic usage. Also, so see, none of the other chargers work with this particular phones. What do you have to do? You have to buy from them again. So anyway, so that's a cross sell, but it's a forced cross sell. It's a anything else that you have seen work?
Either recharge, like if you in Airtel, if you recharge a certain amount, they will give you certain subscription free with it. So it tends to user that they can go for higher recharge just to get all those free subscription like Hotstar, Amazon Prime, and all.
Okay, I think this is basically upsell, right? So basically, instead of doing one, they're asking you to recharge higher and get additional benefits.
Yeah.
Okay.
I think even Apple has that kind of pack where you recharge for that kind of pack, then you get 6 months subscription of Hotstar Premium, something like that.
Prime and Hotstar they give you.
Right. Okay. In the payments, have you seen any other cross-sell work with the payment apps? See, in a Amazon kind of a scenario, you are actually buying the product, right? You are researching the product and so on and so forth. But in all the payments, it's typically it's a transaction that you're doing, right? And you don't typically find that product or service on your platform. You find it elsewhere. You're using this app just to make the payment. So to that extent, there is a disconnect in terms of how you're using, and it is sort of more difficult for you to have the cross-sell happen. I think the other part that we discussed, which is this, the ability to make it far easier to pay, I think that seems to have resonated with all of us because there is a connect there, right? So you want to pay it and it automatically shows it in just a few taps, you'll just finish it. So it's the convenience that you get of making the payment happen. And that's the reason why we use that particular app to make it happen. But cross-sell seems to be much more difficult to make that happen because, so you're actually trying to pay the vendor here. And what else do you cross-sell, right? Or you get what I'm saying?
Yes, so if you pay at Indian Oil petrol pump with Paytm, so we get some extra rewards or extra cashback. It's 0.75%. So I generally used to pay with Paytm at Indian Oil petrol pumps.
So that is basically incentivization, Jairaj. That's not exactly cross-sell. See, cross-sell means, remember what I just mentioned some time ago. See, you're actually buying a Bluetooth speaker. Let's assume it is expensive, okay, maybe 5,000 rupees, wala, right? So, excuse me, one second. Sorry about that. So basically what I was saying was, let's assume you're buying a Bluetooth speaker, which is, let's say, 5,000 rupees one, and you want to protect it, right? So it is very likely that you will go searching for it, right, in order to buy that cover. So phone, we obviously do it, right? So for phone, we obviously, buy a cover and as Akhil said, the screen guard, right? So instead of us buying separately, and then we have to figure out whether or not it matches this particular product, and it is anyway mostly sold. So they will show you saying, see, if you buy this phone and this screen guard and the whatever cover, it will cost you this much, right? And we know that this is anyway, best selling. And if you want, you can further check out if the product is the cheapest one, or the, if it's reasonably priced or not, etc. Right? And then you can go ahead and buy. So this is cross-sell. You're actually buying something, you're buying something else with it, right? So that is cross-sell. So you're selling multiple things you're selling.
So one thing that I have come across, right, cross-sell in the payments industry. A few months back, I remember when I used Google Pay to transfer some money to someone, I got a scratch card saying I get some 20% off on Cool Wings eyewear or something like that. So at that point of time, so coming to your point, Chaitanya, where we say cross-sell is difficult in the payments industry, right? Because we actually use the platform to pay someone, and whatever cross-sell opportunity that we get, right? So how is it actually useful to the customer? So in my case, at that time, that offer on the eyewear was not really relevant to me, because I already wear glasses. I have a good pair of glasses, so there is no need for me to change that, right? But if we just pause and think about it, how do we optimize this cross-selling? So for example, we take companies like Google, right? So they collect all sorts of data about the customer, their browsing behavior, what kind of websites they see, what are their preferences, and then what kind of videos do they watch on YouTube and so on, right? So one thing which I believe these companies will do is they will mine all this user behavior data, and then use the insights that they get from there, and possibly give more optimized cross-sell recommendations, and that's how they'll probably form partnerships with these retail companies for more cross-selling opportunities.
Yeah, I agree with that side. Yeah.
Like in GPay right now, there are businesses also, right? So if you, for example, go to Pavan Story, so you not only make a payment, but you can buy the product in GPay itself. So they are like giving the ability to buy a product, and in that they are giving this add-ons and stuff. The same with Zomato, Domino's, Redbus. Even you can do some shopping within GPay itself. So the businesses give you the ability to not only pay, but to buy a new product in GPay itself.
Especially if it's a product that you, if you had already interacted with that particular business before, right? Then you can show their the most frequently purchased, or the ones that you have purchased, or whatever, so that it becomes easier for you to just make the payment for it, right? Is that what you're saying? Yeah. That's good. Okay, all right. I think we will proceed now. Right?
Okay. So other benefits related to the metrics that we get from a higher customer engagement is obviously higher revenue, then increased conversion rate, increased retention rate, and a shorter conversion time. So I think the first, second, and fourth points are pretty obvious. We have discussed these in previous sessions. But third point is something that I don't think we have discussed until now. But this is also one very important metric that the payment or the fintech companies track today. In fact, the customer that we are working with right now, is very interested in looking at this metric, and so I just gave them a couple of days back a few numbers related to this retention rate. So what this retention rate basically means is, let's say X number of customers transacted on the platform today, right? And how many of these X number of customers transacted within the next 30 days? How many of them transacted within the 31 to 60 days? And how many of them also transacted after from the 61 to 90 days? So they measure this in 3 types. So they measure a 30-day retention, then a 60-day retention, and then a 90-day retention. Okay, so this is also one very good indicator of engagement, which not only tells you how many customers come to your platform repeatedly, but what is the extent of that retention? Do they, so if the customer comes back, do they come back soon, or do they come back very late? And if they come back very late, how late do they come back? Do they come back after 2 months? Do they come back after 3 months? Or do they come back within a 1 year time span? So this is what this retention rate means. And the higher the retention rate, then that is a direct indicator of higher customer engagement. And then the conversion rate, shorter conversion time, of course. So if your user interface is very smooth, right, or if the customer experience of using the app is, if they feel it very good, or if they feel the user flow very easy, then that will obviously result in a shorter conversion time. And higher revenue, increased conversion rate are pretty self-explanatory. Any questions before we move on to the next one? Okay. So these are certain other recommendations specific to the data mining front. What experts say is that companies can analyze customer data and explore offering the following to the customers. So fee reduction recommendations. And so this is the first point, is something that our current customer is also trying to do. So our current customer is a company which processes payments, right? And they have a lot of customers all over the world. And some of these customers, you see, they transfer huge amounts of money, and they do this on a regular basis. Okay. So for these customers, the transaction fee will be lower than for the other customers. So how do these fintech platforms make money? They take a cut out of each transaction that happens on the platform, right? So when there are a few customers who move money in bulk, right, and when they do so on a regular basis, you can't offer them the regular fees that you offer to the other customers. So for them, you have to make specialized recommendations. But what sort of recommendations do you make? How do you exactly make those recommendations which will be best suited to those customers? That is where the data mining comes in. So you look at transaction data, you see what is the volume that they're transacting, okay, and then they run some A/B tests and those kinds. They take those kinds of initiatives and accurately determine at what is that best or optimized percentage of fee which will result in a win-win situation for both the fintech platform as well as the customer, because the fee percentage should be high enough to result in a decent revenue for the fintech platform. At the same time, it should be low enough to keep the customer engaged and encourage them to use the platform more. So that is the first point. Second point, we are saying planning or budgeting goals. So again, this is also this is applicable not only to enterprise customers but also to people like us, right? So you see a lot of banking apps today have this feature. Okay, so I recently saw on the Axis Bank apps, which also gives you a provision to cap your monthly spend. So you set that cap, then it won't allow you to spend more than that. So that is something that will help you reach your budgeting goals, right? Or these apps today also give you the feature to analyze your spend. So how much, I remember seeing my bank statement a few years back where they had this pie chart saying how much have we spent on restaurants, how much have we spent at retail stores and so on. So that is the second. So giving customers this information also helps the customers to plan their goals better, and then that will serve as an incentive for them to stick with the platform. Third point we have already discussed, credit or lending, even if there is no credit score, right? So traditionally, the banks or the other financial institutions have used something called as credit scores to offer loans to customers, right? But a lot of banks today opine that this credit score that is being used today is not an accurate determinant of whether the customer is creditworthy. Okay, so this is where the data mining comes in. So when we are talking about this industry 4.0 and the industry shifting towards using analytics to make these decisions in a more informed manner. So what people actually opine is that when we analyze customer transaction data, that will be a more accurate predictor of whether the customer is creditworthy or whether that customer will be capable of paying back the loan or not. So that is where people today are moving away from the conventional credit scoring model to a data mining oriented approach to credit scoring. And then the fifth point is basically personalized customer journeys. So A/B testing is something like you show customer two different things, and then you see which of those two things is that does the customer prefer. So this could be as simple as showing two different forms of ad, and then checking which ad works better or makes more customers land on the web page. So this is the most simplest form of A/B testing. Okay, and then let's say these fintech companies or any e-commerce platforms today will have multiple possibilities for the user flow, right? And those user flows will be having so many different designs, and then they will run these experiments using these different designs. They will determine what is the best possible user flow, which gives a higher conversion rate or more success, right? And then they will nudge customers to pursue that customer journey, which is more likely to result in a conversion. So that is what we mean when we say personalized customer journeys. So in fact, with our current client, we are working more on this point where we are talking about how do you optimize the landing page of the website, what is the best way to do that, and so on. So for this, they are doing some A/B testing and stuff like that. So hopefully when we make more progress on that, I hope to be able to present that in one of the user sessions. Any questions here until now? Okay. So we talked about a lot of metrics that pertain to customer engagement, but what actually drives those metrics, or what features or what strategies can companies adopt to drive engagement? These are certain things. So quality of service, the transaction speed, and then the percentage of successful transactions, and then the variety of service that is being given to customers, right? So in the fintech industry, you have this concept of payment rails. So for example, when you're transferring money from your account to someone else's account, do you do a direct account transfer, or do you use your debit card, or do you pay from your wallet? So all these are called as payment rails. And then when you do cross-border payments, then how many currencies does the app offer you to make that payment in? And then the credit facility and so on. And all fintech companies today feel that the small and micro enterprises, so that is an untapped market. So largely because the business in this sector, in many countries, it is unorganized. They are yet to be included in the digital ecosystem. And so when that happens, then there are a lot of customers out there to acquire, and that will possibly result in a huge revenue for these companies down the line. Okay, so that is the second point. And then ease of use. How easy is it to sign up on the platform? How easy is it to upload your documents and get them verified? Or the fintech companies also, this is also something that we have in Google Pay today, right? So you can access your phone contacts and then transfer money into them directly. How easy is it to do that? And then issue resolution, customer service executives and bots, we discussed this point already. Gamification is one other important point. Okay, so this is also something that we can see in the Google Pay app today. Okay, and so I saw this recently where when you open that rewards page, you have that on the top, there's some numbers displayed, okay, 1, 2, 3, 4, 5, 6, and so on. Okay. And then I think it goes something like this. I'm not sure because I haven't progressed much on that path since I've not made so many payments. But I believe it's like when you cross a certain level, then you unlock scratch cards which could possibly be worth more amount of money. So for example, when you cross level 10, the maximum amount that you can possibly get from a scratch card could be like 100 rupees. Okay. When you cross a level 20, then you can possibly unlock scratch cards worth 500 rupees. When you cross level 30, for example, you can possibly unlock scratch cards worth more than 1,000 rupees, something like that. So this is what we mean gamification. Okay. So these companies encourage you. The thing is, so they will say that you can possibly win up to 500 rupees or 1,000 rupees. So that makes the customer use the platform more to make payments. Right? So by gamifying the platform, they drive engagement. That is the point on gamification. And then trust is basically, so when the company gives a guarantee that your data is safe with us, we have all the privacy measures put into place and everything, and we will guard against any data breaches. We have this kind of security or that kind of security that helps customers trust the platform more, and thereby they use it more for their transactions. So these are certain ways in which companies drive engagement today. Certain other metrics, number of logins, number of transactions, percentage of logins with a successful transaction, time to first transaction after signing up. So after, let's say, so this time to first transaction, right? Typically, why is this an important metric to measure? Because companies might run certain ad campaign where customers are incentivized to sign up on the platform, but they just sign up and leave it at that. They don't do any transaction. Okay. So that is where we say if the customer is really engaged, or if the platform is really engaging to the customer, then this time to that first transaction should be very, very low. Okay. And then time between two successive transactions. How often do the customers use the platform? And the retention percentage we already talked about. Average session time, how when a customer logs onto the platform, how on an average, how long do they spend? Churn rate, customer satisfaction, net promoter score, customer lifetime value is another important metric which we discussed in Sinna's session last week. These are some other metrics. Any questions? Does anyone have any questions until now on any of the points that we have covered or any of the metrics? Alright, so that's all I had for today. If nobody has any further questions, we can close.
Sai, I just have a question.
Yeah.
So here only, can you please explain this average session time? What does this mean? Like that, for example, the session time should not be too much also. So basically, according to my understanding, if for example, I'm using PhonePe and I'm paying to someone. So if it's taking too much time, it's a little bit slow. So from next time, maybe I'll not use PhonePe and I'll use any other app.
Yeah. Okay. So there's a distinction between session time and transaction time. So transaction time is where we say the time taken between the submission of the transaction details to the time the transaction is processed successfully. So that is what we define as the transaction time. Session time is the total time spent on the app or the website. Now, the reason session time is also considered to be an important metric of engagement is that today these platforms offer other facilities apart from payment, right? So for example, you can spend some time on the rewards page seeing what rewards have you won, how much money have you won via scratch cards, or you can check out that rewards page to see if there are any coupons which you can possibly apply at those cross-selling opportunities that we discussed, right? Are there any coupons that you can possibly apply at a retail store, for example? Okay. Or let's say you're trying to recharge your mobile phone. Okay. So you will browse through that entire list of packs. So what are the different data packs available? What are the different talk time packs available? Or let's say you're trying to recharge your DTH. Again, there will be so many offers, right? So when you talk about session time, it includes not just the time spent on transacting, but also the total time spent on doing other activities within the app or the website. Does that answer the question, Anushri?
Yeah.
I have one more question from my end.
Yeah.
So since you have some experience, like viewing the trend of number of transactions of the particular client, so do you observe like maybe in the first week of the month there are like more or much transaction compared to the later part of the month, or is it not that great?
Yeah. So with the current client that we are dealing with, we observe that on
let's say PhonePe and Google Pay, right? They are offering these many services, transactions and everything, right? So how do they earn money from us? Because there's no direct charges that they are imposing on us, right?
For Google Pay, you mean?
Exactly, Google Pay or PhonePe.
Yeah, I am not sure. So in Google Pay kind of a platform, we do not pay any money to Google Pay directly. Okay, but I believe the other companies or those cross-selling or the DTH or the phone recharge, so all those other things that are available on the platform, right? I believe a part of their contract or their partnership would be that in order for you to be advertised on the platform, and in order for you to do business on the platform, they will have to pay some money. So for example, when I use Google Pay to charge my mobile phone, let's say I'm using Airtel connection and I use Google Pay to recharge my Airtel pack. Okay, so then for every transaction that happens, Airtel would pay some amount of money to Google. So that is one way in which these platforms make money.
So very quickly, so I think just to add to what Sai mentioned, so basically, I think that's a big concern, Akhil, as to how much revenue do these payment platforms generate. So a couple of things. One is typically the charges that get imposed. They are usually free to the customer, right? So for example, even if you use a debit card, right? So when you swipe, in general, you expect that you don't pay anything extra. There are some shops that basically say, okay, if you're paying by card, we'll charge you X amount, or they'll say minimum this much of amount has to be there. Otherwise, we won't. We'll let you use your card, etc. So that's also there. But in general, it has been free to the customer, right? So this matter of how much revenue these companies make is a matter of concern, a big concern for all of these payment platforms, because they are largely free and you don't know when you're going to generate any revenue. So in fact, some time ago, I think it was I think this is just a hearsay, or maybe I just saw a news item. So because we are recording, I'm saying this. So the CEO of Paytm has mentioned that okay, profitability, we don't know when exactly we're going to be profitable, right? So all of these payment platforms, that's the biggest concern at this point. Just to add to that, so the point that Sai mentioned, which is that I think the receiving company may be paying something at this point, or maybe it is free at this point. We don't know when exactly it will shift from free to pay something, but in any case, it's going to be far lesser than what, let's say, some of these debit card companies or the credit card, whatever the card companies have been charging, because that is way higher. And so, for example, see, if the company makes, let's say, if they take 2% of the revenue, right, which is something that we can expect, and the company actually makes 10% net profit, okay, which means their total sales are 100. Their net profit is 10 rupees, right? But the card company takes 2% of the 100 rupees, okay, which is they're paying 2. So it's a very big cost for, in terms of at least net profit, it's a very big cost for the receiving company. So that is what I think all the new age payment companies are addressing, and that the cost will be not probably 2 rupees, right? It is probably going to be, or 2 rupees or 2% that I was talking about, or probably even worse in some case it is 3+%. It's going to be far lesser, probably about maybe 25 paise or something like that, right? Which is much lesser than what the other options have been doing. But in any case, that's a big concern. So on that note, I think it's a good idea, Sai, for you to just quickly check Paytm financials, because they're a public company now and their financials are out, as to even in the revenue that they generate, how do they generate that revenue, and where do they generate that revenue? Because they also have all this e-commerce and all of that stuff. I'm not so sure where exactly they're generating. It will be a nice data point for all of us to see as to where exactly they generate their revenue from, and how much do they generate from the payee company.
Sure, yeah. I'll check that out, Chaitanya.
For GPay, actually, as you pointed out, Chaitanya, they take some cut from the big businesses. And that is like 80 to 90% of their income, and 10% they get from product placement and offers coupons. I looked into it last week or something like that. So that's when I saw this split up. I'm not sure if it's accurate, but few of the articles.
It's a good idea to see what is the source of that info, Sanjay.
Okay.
Because see, it's very simple. If the business is many large businesses don't use it as much, right? So for example, Airtel, etc., they use, so that's very clear, right? But the smaller companies, they don't use, and bulk of what we're using is actually for smaller transactions, right? So I think it would be good to see what the source is, so that way we can rely on it.
Okay. Yeah.
I think one more interesting point, Chaitanya, recently PhonePe has actually started charging customers for mobile recharges. Recently I recharged my grandmother's phone, it charged 2 rupees. So it is the first UPI company in India to start the charging primary customers, not the B2B customers.
Okay, interesting. Okay.
Usually, just like how Sanjay mentioned, they usually charge from their partnerships or loyalty programs which they design for some companies. Like for example, there is a biryani company, they only make biryani, it's a cloud kitchen. We won't see their ads in anywhere, but in Google Pay it pays coupons for customers so that they can buy it. So in a way it is influencing customers to buy, so they get a commission from these B2B people, but largely they are all unprofitable at this point of time, like you mentioned.
Yeah, you're right. Okay, all right.